Most of the advice you'll find online about going offshore is 20 years out of date, and following it today is a direct ticket to a tax audit. Here's the trick it's all based on. For decades, the move was almost insultingly simple. Set up a company on a tiny island with no taxes, run your profits through it, and pay almost nothing. It built fortunes, it filled seminar rooms, and today, it's effectively dead. Because governments finally closed in on the one fact that unravels the whole thing. A company doesn't live where its paperwork says it lives. It lives where you run it from. Set up a zero-tax company on a palm-fringed island, then run it from your laptop in London or Toronto or Sydney. And as far as the law is concerned, that company is sitting right there with you. It owes tax right where you're standing. The island address is just decoration. This is the third flag, the corporate flag, where your business is based, where your income is generated, and where it gets taxed. Last time, you learned how to fix where you live. But here's the trap nobody warns you about. You can move your whole life to a tax-free country, and if you leave your business in the wrong place, you can hand back everything you just saved. Your company's home address might be the most expensive decision you ever make, and almost everything the internet taught you about it is now wrong. Most people think going offshore is about finding the right country. It isn't. We treat it like an engineering problem, matching where your company lives to where you live, under rules that get rewritten every year. This is flag 3 of 5, and right now, you've built half a bridge. You've fixed where you live and where you work, but your wealth is still exposed to the next 2 traps. Subscribe, and let's finish the architecture before the rules change again. Your corporate flag is the country your business calls home, legally and for tax. And if you're new to the 5 flags, here's the whole idea in a single breath. Instead of letting one government own every part of your life at once, where you're a citizen, where you live, where you earn, where you keep your money, you place each piece in the country that handles it best. 5 flags, 5 separate decisions. No single government has total claim over you. The first flag was your citizenship. The second was where you live and pay personal tax. This one, the third, is where your business lives. And it runs on a rule that catches almost everyone by surprise. Where your company is registered is not the same as where your company is taxed. A certificate of incorporation from a zero-tax island tells you where your company was born. It tells you almost nothing about where it has to pay, because most countries decide a company's tax home not by its registration, but by where it's actually managed and controlled, where the real decisions get made. The lawyers call it the place of effective management. In plain terms, it usually means wherever you are. So the offshore company was never really about the company. It was always about you, where you sit, where you decide, where you live. Get that wrong, and the island is just an expensive postbox. Myth 1. An offshore company makes my income offshore. This is the big one. The belief that the company's address sets the tax. For decades, it half worked because nobody checked. That era is over. Under pressure from the EU and others, the zero-tax jurisdictions were forced to bring in economic substance laws. Translation: if your company claims to be based somewhere, it now has to actually be there. Real office, real people, real activity, real decisions. An empty shell with a brass plate and a mailbox doesn't pass anymore. Put plainly, if your company has a Caribbean address but your laptop is on a kitchen table in London, the law doesn't see a Caribbean company. It sees a London business with a very suspicious postbox, and it taxes it like one. Even the UAE, for years the zero-tax poster child, now charges a 9% corporate tax. The age of the no questions asked haven is simply over. The hollow offshore company that so many online gurus still sell you is dead. Anyone telling you otherwise isn't selling you freedom. They're selling you an audit. If this is useful, you can subscribe right from your remote. Press up and click on subscribe. So the natural next thought is the clever one. Fine, I just won't take the money out. I'll leave the profit sitting in the company untouched and pay nothing until I do. It feels airtight. It's the exact trap the next rule was built to spring. Myth 2. If I don't pay myself, it isn't taxed. You've probably heard about the new global minimum tax, the worldwide deal to make companies pay at least 15%. It's real, and it's now law in dozens of countries. But here's what the headlines leave out: that 15% floor is aimed at giants, multinationals with revenue over 750 million euros. If that's not you, it was never about you. The rule that's actually built to catch you is older and far more aggressive. It's called CFC, Controlled Foreign Company Rules. It used to be a worry only for the very wealthy. Now it reaches the solo founder with a laptop. Here's how it works. If you control a foreign company and that company is taxed too lightly, your home country can ignore the company wall entirely and tax its profits as if they were already in your pocket. They don't care that you never paid yourself a cent. They tax the profit the moment your company earns it, cash that hasn't reached your pocket and maybe never will. France does it. Spain does it. Italy, the United Kingdom, Australia, Canada, the United States, they all run versions of it. So, the just leave it in the company plan doesn't defer the tax. It only removes your privacy while leaving the bill exactly where it always was. There is a legal way through this, but notice what it actually requires. CFC rules hinge on where you are a tax resident, which means the structures that genuinely work pair a company in a low-tax country with an owner who lives somewhere that doesn't have these rules at all. Places like Panama or the UAE. The company and the person have to be designed together, which is the entire reason we think in flags. Myth 3. Going offshore solves it for an American. And if you're tempted to outsmart all of this with a clever stack of holding companies, don't. These rules are built to look straight through the layers to the one person actually in control, you. Which brings us to the people who face the hardest version of all of this. Because once again, if you're American, the asterisk is the size of a building. The United States doesn't only tax you personally on your worldwide income, it taxes you on the profits of your foreign company too. Own most of a company abroad, and a regime called GILTI reaches across the planet and taxes much of what that company earns every year, whether you take the money out or not. So for an American, an offshore company isn't an off switch. At best, it's one part of a carefully engineered structure built with professionals that manages the bill. At worst, it's a stack of extra filings, extra penalties, and extra risk for no benefit at all. The only true escape is still the one from the very first flag, renouncing citizenship, exit tax, and all. The flags connect every time in order, so strip the myths away. How does a serious person actually plant the third flag? First, substance is the new password. Wherever your company claims to live, it has to genuinely live there. Decisions, people, activity. A structure you can't defend is worse than no structure at all. Second, your company and your residency are one decision, not two. CFC rules are triggered by where you live. So the cleanest setups put the business in a low-tax jurisdiction and the owner in a country that doesn't claw foreign profits back. Plant flag 3 without flag 2, and you've only done half the job. Third, match the company's home to where the work actually happens. If you and your team are genuinely in one place, that's where your substance is. And fighting that with paperwork is how audits begin. Sometimes the right answer isn't exotic at all. Fourth, build it before you need it, not after. Migrating a company, moving its management, unwinding a bad structure, all of it is slow, costly, and can trigger tax on the way out. The time to design the third flag is before the profits arrive, and underneath all four, this is the most technical flag of the 5. Don't freelance it. A cross-border corporate tax specialist isn't an expense here. They're the difference between a structure that protects you and one that quietly detonates. If this is helping, the subscribe button's one click away. Press up on your remote and it'll pop up. Here's the thread that ties the first 3 flags together. Flag 1 said, where you're a citizen. Flag 2 said where you're taxed as a person. Flag 3 says where your business is taxed. 3 different countries, potentially, 3 deliberate choices. And they only work when they're designed as one system. The offshore company alone never worked. The offshore company matched to the right residency, built on real substance under current law. That's not a trick, that's architecture. But notice what we've done so far. We've decided where your money is made and where it's taxed. We haven't done a thing to protect it. And here's the part too few people plan for. A government that can't tax you can still freeze you. The moment your wealth lands in a bank, falls under the control of whatever country holds it. That's flag 4, the asset haven, where your money actually lives once you've earned it. It's the difference between having money on a screen and truly owning your future. That's where we're going next. One last thing, and it matters. This is information, not advice. You just watched the rules that govern offshore companies get rewritten in the space of a few years. Substance laws, a global minimum tax, CFC rules reaching further every season, and they're still changing, country by country, right now. So assume the specifics here can shift, and that yours are unique to you. Treat this as the starting point for a conversation with your own cross-border tax specialist, never a substitute for one, and have it before you register a thing. Understand it deeply first, then get the advice that fits your life.